Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, December 3rd, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the developer and president of Simple Market Signals at simplemarketsignals.com. Now, we will come back to this chart in just a couple of minutes, but I want to move over to a weekly candlestick chart of the S&P 500, and we'll get a big picture view of what happened in the market, and then we'll work our way down to the shorter time frames. And the first thing we want to look at here is a weekly candlestick chart of the S&P 500 that starts in the first week in July. So we're just kind of looking at the last half of 2021 so far. And on this chart, we can see that the S&P 500 was down 1.22% for the week, and it happened on really high volume. Now, I think a lot of people, it feels like the market was down more than it was, but we were up 2 days, down 3, but collectively, we were only down 1.22% on the S&P 500 for the week. We closed at 4538.43. Right over here, as you can see, and we're still trading well above the 40-week moving average, this blue line, but we did undercut and close slightly beneath the 10-week moving average, this green line here. By the way, this orange line is the 20-week, pretty equivalent to the 100-day, not exact, but close to the 100-day, and you can see there was a little bit of trading on the tail below this, on this candle. You can see where my cursor is moving, just a little bit of trading for just a little while this week below that orange line, that 100-day or 20-week moving average, but closed in between those two. So not horrific. Again, I think it felt worse than actually it was. The 40-week moving average, by the way, is setting at 4330.87. So we're about 4.5 to 5% still where we're at right now. We're about 4.5 to 5% above that 40-week moving average. So if the market is heading lower, which, guys, there's no way to know, but I'm going to show you through these charts that I think it's possible that we might have put in a short-term bottom at the tail end of this week, so stay with me and I'll show you that. But if the market is going to pull back to the 40-week moving average, we've got about another 5% to the downside if that's the case. Now, this blue line here, this is the 4,500 line, and, when I looked at the trading action this week and the fact that we dipped just for a short period of time below that 4,500 level but closed again at 4538.43, it got me to thinking about, well, why did the market stop there and go back up? And so these are the kind of things that get me to thinking, right? And you can see that this 20-week moving average, which by the way is setting at 4506.33, so not, just about 6 points above that level. It looks to me like maybe that there's some support right there. So I wanted to know, right, these are just the things that I think about. I get curious, start playing around with the charts, but I wanted to know how many weeks we've actually had in the history of the S&P 500 where we have actually closed above 45 in the first 4,500. And the first week was right here back in August. We had another week that followed that above 4,500, and then we pulled back beneath it. And then we finally got back above on a weekly closing basis, back above the 4,500 level right here. So the bottom line is there's 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in the history of the S&P 500 where we have closed above 4,500, and this last week was one of them, okay? So I just point that out because we're still, even though, we pulled back for the last couple of weeks, we've lost a little bit of momentum here. This happened on high volume, which oftentimes is a crescendo, right? It's the end of the move, so it's potentially a good thing that we had this high volume this week because oftentimes this high volume exhausts the selling, which allows us then to go back in the other direction. But only time will tell, right? We don't know, okay? So kind of keep that in mind. I want to move over to the IWM real quick, which is, of course, the Russell 2000 small cap ETF, because this is super important, guys, and it's super important from an entire market standpoint. Because keep in mind that the markets are generally healthiest when small caps are participating to the upside as long, as well as large caps, all right? But the IWM has built a huge sideways base this year, and it really started back in February, all right? I mean, look at this, just this huge sideways base. Well, we did break out of this base the first part of November, and then the entire market has pulled back, which brought the IWM back with it. Now, I don't think it's just the IWM's fault, because if you look at the Dow or anything else, and we're not going to get into the Dow today, but if you look at a lot of things, mid caps, a lot of these things have been down 4 weeks in a row. So it's not just the IWM that has pulled back. But the good news is, if there is any in this right now, is that the IWM has just pulled back to its trading range that it's been in since back in February. Now it's at the lower end of that trading range, and yes, we did undercut this green line here, which on this chart, that is the 200-day moving average, which, by the way, if I didn't point this out, this is a daily chart, so I apologize if I didn't point out that this is a daily chart, but it is. But you can see here the last couple of days, the last 3 days, this last week, we had a pretty nice little consolidation and just kind of traded sideways. So to me, again, that's potentially good news. The fact that we're still in this trading range that we've been in, I mean, we have to look at these things in, kind of in perspective, right? And yeah, huge volume. I mean, look at this volume we had to the downside, which again, perhaps, maybe this has exhausted some of this selling, at least in the short term, which possibly could allow the IWM to go back up. All right, but only time will tell. So now let's jump back over to the S&P 500. This again is a daily chart of the S&P 500. This particular chart goes back 6 months. All right, and we're back to this 4,500 line, which again I brought up right here, but now let's take a look at it on a daily basis, and you can see back at the end of August, beginning of September, there was a few days, but only a few days, right, of trading above 4,500, and then we fell below it, and then we got back above the 4,500 line in the middle of October as we looked, and this week we pulled back, and we slightly, on Friday, as you can see here by the tail of this candle, slightly undercut that 4,500 level. But there hasn't been one daily close since back here in October. There hasn't been one daily close below 4,500, even over the last 3 days, right? We came really close, undercut it for just a brief moment on Friday before closing higher at 45.38.43. But again, keep this in perspective, guys, right? You had this breakout round trip is what I call this after, making a new high back here. This was a new all-time high at that time. And then you get a breakout above this level, and then you round trip this. I've seen this pattern over and over again throughout my, 25, 30 years of trading. So it's not necessarily a bad thing. And we've only really had one super high volume day right here, and this was on November 30th. So, again, let's just kind of not get overly bearish just yet. And also, I want to point out this green line here. That's the 50-day moving average. And you can see on Friday, we closed just barely below that 50-day moving average. By the way, the 50 is sitting at 45.44.73. It's right here. I know it's hard to see, but 45.44.73, and we closed at 45.38.43. So we closed just a few points below the 50-day moving average. The orange line on this chart, that is the 100-day moving average, where over here it was the 20-week, and they're not exactly the same, but they are close. And you can see on the daily chart, we still have not touched the 100-day moving average during this pullback, where back here in September, October, we actually, fell below it for a few days. But again, we're still quite a ways above, 5% or so above the 40 or the 200-day, this blue line, the 200-day moving average. So again, I always I try to be very fair about the data, look at these things on both sides. And I know there's a lot of people that are super, negative out there right now. And I just look at the data and try to extract the facts. And the facts to me right now are all we've done is pull back to around the 50-day moving average. We're staying above this 4,500 level. We've only had 9 weekly closes in the history of the S&P 500 above 4,500. We haven't had one daily close below 4,500 since back here in October. We're still above the 100-day moving average. Haven't even touched that. Barely closed below the 50-day moving average. So, so far I'd say it's not horrific. All right. Now let's move to an hourly chart of the S&P 500. And for any of you that have watched my videos for a while, I've been talking about how important this 4430 level is. And then we finally got above this back in October, and then rallied up to this 4,700 level, this top blue line, where we really stalled out and just above that level, and we've pulled back. Well, again, we know that we're above the 4,500 level, okay? But if we're going to get weaker here, the next logical place with any type of support would be around this 4,430 level. So I wanted to point this out so, you can watch it, and if 4,500 doesn't hold this next week, then we really do want this 4,430 level to hold. And if you want to see how important this 4,430 level has been, because it's been in play since clear back at the beginning of the summer, so go back over my last 5 or 6 weeks videos, and you'll see more stuff where I've more videos where I've gone back and looked at this 4430 level to show you just how important this is. All right, I don't want to beat that to death, so if you want to see it, go back and look at the last 5 or 6 weeks videos. But I just want to point out that if 4,500 doesn't hold over the next week or so, then the 4430 level would be a super important level to watch. But I want to point out here, and now we're looking at a 15-minute chart for the last 5 days. So for the last week of trading, Monday, Tuesday, Wednesday, Thursday, and Friday of last week, you can see this last week where we got really close to this 4503 line on December 1st and 2nd for a few minutes, and then rallied above that. Now, I just point out this 4503. This is just for visual reference. I just drew the line to make it easy to see. There's no real significance of this level other than the fact that this particular candle right here came down to about 4504 and change, and then we rallied off of that and then pulled back. And then, as you can see here, late Friday afternoon, we got underneath the 4503 level for just a few minutes, slightly undercutting the trading from a few days earlier, and then rallied to finish higher. The reason to me that this is important is this is potentially a short-term double bottom on the S&P 500, all right? And it's happening above 4,500. So we want to watch this next week, but to me this is very encouraging, right? We don't know for sure. Nobody can predict the future. A lot of guys out there, think they can, but nobody. I don't care who you are and how good you are at technical analysis. All we can do is analyze the data. Nobody knows what's going to happen from day to day, right? We can take clues and have hunches or whatever, but nobody knows for sure. So to me, though, this is encouraging. We have a possible, and you can look at this in 15-minute charts, 30-minute charts, hourly charts, or whatever, and you're going to come up with a very similar potential anyway of a short-term double bottom here, where the trading during the last hour of trading on Friday the 3rd undercut the trading from earlier in the week. And that to me is encouraging. Fingers crossed. We perhaps we've seen some of the worst of the selling here, with some of the the market pulling back to some major support areas, the 10-week, the 20-week moving average, and on high volume, so hopefully the selling has exhausted itself, and we can move higher next week. And also, I want to point out that I just launched a new video about an hour before I am posting this technical analysis video that you're watching. And the video that I launched just prior to this was how to be more successful in the stock market. This is something I've been working on for quite a while. And guys, I would highly encourage you to watch this video. What you're looking at here is the thumbnail for that video. So I will leave a link to this video in the how to be more successful in the stock market video in the description box below the video that you're currently watching on the technical analysis for the week ending 12/3. But I would highly encourage you to take the time to watch this video, how to be more successful in the stock market. You're going to learn a lot, and it's going to really, really help you. So please watch that video. You can find it on the YouTube channel, on my YouTube channel. Again, How to Be More Successful in the Stock Market is the title of the video, and I will also leave a link to that video in the description box below the video you're currently watching.